All right, I'm here with Jeff from the Habistat, doing a Greater Toronto Area GTA real estate market report for the first time on a monthly basis. So we pull this data from Treb's API system, create some charts out of it. Well, I don't do any of that. You do. I'm not exceptionally knowledgeable on the data viz and technology side of things, but we're going to look at a couple of charts and trying to do some conclusions, see what the hell's going on in what should be a hot spring market, according to to a lot of people. So I guess we're going to start by looking at the sales snapshot, compare a couple of regions and different metrics, and then look at volume, sale to list price ratio, and then new listing activity, and see if there's some sort of conclusion we can find from all of these. So what do we have here?
Awesome. So starting here with the snapshot of the sales that happened in March 2022 here. So we start on the top left, we can kind of see just the key stats for the period. So volume of almost 10,000 units, median sale price of almost 1.2 million, average sale price just over 1.3 million. Average sale to list price ratio of almost 116%. For listings that were sold, they're on market for an average of 8 days, and 85.2% of sales were above the list price. In the top middle here, we're kind of seeing the sales volume by price range. So what's really sticking out, across all property types, all regions within the GTA, the most common price point is really the 1 to 1.5 million area. If we look at the 2 million plus, that's representing 11% of sales in March.
Right. Yeah. And so, I mean, to me, that really tells me that, we are, from a volume perspective, we're seeing a spring market, right? In spring market demand, you see a lot of demand for detached product and mid-market product. And, that those two price ranges would be representative of what's in the dead center of the market right now. Okay. So I guess let's move on to comparing what this looks like month over month with February to see if there's been a shift in that volume. So what are we looking at here?
Yeah, so the left side of the screen here, we've chosen to look at February 2022 here. On the right side, same stats we just saw for March. And when we look at the bottom first to see the sales composition, we're seeing detached 43% in February, 44% in March. Condos pretty consistent, and so the overall composition was pretty stable.
Right. Fair enough. And then, but at the same time, prices moved down and the sales to list price ratio moved down, right? With average days on market remaining pretty static. So something's happening here, and it's not related to volume or absorption, as it would appear. The part that I think is interesting is you can see sort of in February, a good concentration of volume in the lower end of the market. So a lot of sales happening, in maybe that first or second home product. And then a lot of that capital, that liquidity is available in the market, and you see it being ported over to your March, where, you're probably starting to see people step up. But, typically in your March, April, May, you start to see prices actually get skewed up by this composition mix changing, right? More people buying more expensive homes. You get families who want to transact in March or April. They want to close in the summer because they want to take possession of a house in between school years. Maybe that's changed as a result of COVID because of school from home or whatever it is, or maybe we're seeing something else happening, right? So yeah, I think if we look at sort of what's happening on a regional basis, the micro story might tell us maybe a little bit more of what's happening in the spring market here.
So yeah, here we're kind of seeing on each line represents Durham, Halton, Peel, Toronto, and York. Obviously, quite the drop off, across all regions in March 2022 here. We are focusing on only detached because when you're looking on an aggregate basis, although the overall composition was pretty similar month over month, it can be different between different regions. So when we're looking at detached, this is what we're seeing. If we look at all property types, we are seeing Toronto trend upwards slightly in March. And yeah, Dan, how does this line up with what you're seeing?
My perspective, it makes sense, right? Like I think that in the micro, I think the macro picture is pretty set, right? Interest rates are moving up. There's a lot of crazy shit going on in the world. These are going to have impacts on people's buying power, buying patterns, and buying power. And so how long does it take for that to have an impact on price? It's impossible to tell, but if you see prices going down already, typically they roll over a little bit towards the end of the spring market. Again, that composition mix shifts around a little, but it doesn't look like that's happening yet. Like you're seeing more spring market composition, so you're actually seeing a greater share of your mid-market product transacting, but yet the prices within that mid-market are maybe pushing your average and median price metrics down. In the micro, hearing that Toronto is, if you look at all product types, that Toronto is the only market that's still moving up, and seeing that detached product is across the board moving down, it's telling me the story that people are reurbanizing, right? And the cities are making an effort to reopen in a meaningful way. And people are making that trade, and they're making that trade with real estate. So, I would expect to see the premium for a suburban house with a backyard start to decrease. I think we're starting to see condo prices move up. And so the micro story isn't exceptionally favorable for, the suburban house price acceleration that we saw for the past 2.5 years, right? Or basically since the beginning of COVID. And I don't think the macro picture is favorable for anything in property. So I guess the question is, are we seeing the spring market turnover, or are we seeing, a cooling from the inside out, or a cooling from the top down of which properties are most expensive? I think only time will tell, right? So I guess you've got property type up here. So what are we looking at here?
Yeah, I think what's interesting is, detached is taking the biggest dip from February to March. Apartments are actually the most consistent, right? Basically flat month over month. That kind of plays into that story we were seeing with the Toronto trend. Toronto kind of outperforming those other regions.
Yeah, I would agree. I think that, it's no surprise to me that condos are outperforming asset types that are less urban, right? I think that the premium for a backyard, a big house is going away as society reopens. For the past 2.5 years, people have been, crowding the suburban housing trade on the assumption that COVID was going to be a relatively permanent change. And I think that as that assumption starts to unwind, it's interesting to see how quickly people go back to their habits, right, and their patterns. And so, seeing condominiums being stable among detached product declining, it tells me the story that demand is reurbanizing. People are bullish on the city reopening. The other interesting part, though, from my perspective, is that's typically a product that does the best in your summer markets, and seeing and typically your detached product, your bigger houses are the ones that are trading in the spring. Seeing volume happening in the suburbs and volume not being exceptionally impacted in the suburbs from February to March, yet prices coming down at the same time. I just find it's telling me that there's something else happening here, and it has to be a macro story. It's not identifiable in the micro what's causing that. Maybe it's buyer exhaustion, maybe it's a blow off top, maybe it's a cooling period, or just general recoil, right, from fear. But unless we're seeing a record supply flood, and maybe we can look at those next, it doesn't make sense to me that this is an exclusively microeconomic story, right? So I guess you've got here, you can see a steep climb in, I guess this is Durham, which is a famous market for COVID price acceleration, but you see a steep acceleration heading to what, your sort of 500 daily listings, or sorry, 500, I guess that's weekly listings. But if you look at spring market of 2021, it actually, we haven't even gotten close to that peak yet. And so from my perspective, we're seeing typical spring market behavior. There has to be something else that's causing this price decline, because this isn't a supply flood story. To me, it was like, I saw a lot of anecdotally, I saw a lot of opportunistic supply. I saw a lot of people trying to time the market. I saw a lot of people saying prices are amazing, I'm going to cash out. And I thought it was going to show up in a supply flood, but it hasn't in the data, right? And you could probably see that. It wouldn't surprise me. York region might be a little bit more extreme on the supply side, but I mean, Durham is really where I expected to see the most recoil, and we're not seeing it yet. I mean, you can see it there too. York region again behaving like a normal spring market, right? I mean, not even really, like, it's still not even nearly as much supply, right? So I think again, it's going to come down to what's happening, and so I guess the next piece we could look at is that sale to list price ratio, right? What's happening with the bids? Are we just seeing a decline in the bids between?
Yeah. So I mean, looking at Durham in particular, right? Ever since what is this here? So about the 6th week of 2022, so mid-February, the sale to list ratio has actually been dropping pretty significantly. So at this peak, it hit just over 130%. Most recently, it was just at over 120%. So seems like things are getting a bit less competitive. But I mean, when we look back, we're still near record highs, right? And if we look at the percentage of sales that are going above the asking price, we're still about at far close to record highs on this. There's a downward trend, but we've seen that quickly change, in a matter of weeks or days sometimes.
Yeah, I guess you could say so. But if you look sort of in the historics that we can see here, that on a weekly basis, most downtrends were very quickly corrected or either stabilized, like they traded flat. We haven't seen a sustained downtrend like we're seeing right now. The part that I think is important to note here is that it looked like it was almost a sustained uptrend from, I guess it would be Christmas or the new year, to the peak in what looks like maybe mid-February or early February, which is in line with a lot of the stories that I'm hearing from people with different data, right? Early February, I think February 10th was sort of the peak. So, the interesting part is when that curve is pointed upward, to me, that means that upward price discovery or positive price discovery is happening, right? That means the sellers are basically, asking for whatever they don't really have a concrete price expectation because of the way our bids are structured, which is a problem in itself. But sellers are basically in a price setting position, and now we're seeing where the buyers again take control of it by overbidding or overbidding on underpriced listings, and that can easily again price discover upwards. As you start to see that come back down, buyers again are now, from my perspective, taking or creating a downward price discovery environment. So it's only a matter of time to get that I would expect that number will probably normalize. I mean, it should normalize at 100%. I would love to see that happen, or even in the 90s, in a balanced market. But eventually you're going to start to see sellers list prices actually change there. So we're going to stop seeing underpricing as a result of that.
Yeah. So I mean, the last time we've seen 100% was back in May 2020.
Right.
So it's been a while, of heightened competition. But I do have a feeling that there's just been a change of sentiment even in the past couple of weeks, right? Talking to individual agents as well as just the type of articles that are being written these days. There seems to be a lot more of just general fear, people wondering if we've reached the top.
I would agree, and I think that we've deduced from most of these things that it can't be attributed to anything. It can't be attributed to absorption slowing, because it's not slowing, right? Like the days on market of a sold property is the same. It can't be attributed to a supply flood, because supply is actually lower than a typical spring market. And so to me, it's like there has to be something else happening in the market, and we know what's happening in the market, right? Buying power is being reduced by an interest rate hiking cycle, and there's a lot of shit going on in the world that is making people fearful to make a huge investment, right? Those are reasonable things. The question is this a temporary phenomena, or does the rate hiking cycle roll over into a long sustained period of downward price discovery? I don't know if there will be early indicators evident in the micro of that happening, but I think that continuing to look at this on a monthly basis and see what's happening with trends is the best way that we can create a degree of safety and downside risk management for for individuals, for realtors, for anybody who wants to know about the housing market. And if you want my honest perspective, I do think we'll see a long bear market. Like that's how Canadian housing cycles work, right? And I think the macro is set for that to happen with, if Scotia is right about 8 rate hikes or 7 rate hikes over 2 years. I mean, if this is what happens after 1 rate hike, you can only guess what happens after 8, right?
Yeah. Yeah, that'll significantly reduce buying power if it actually happens and it is sustained. And yeah, if you checked out our monthly national update a few weeks ago, you would have seen how we covered Calgary, right? And you saw, what was it, 15-year stagnation, right, where prices are still lower than they were in about 2007.
Yeah.
And I think it's just a good reminder that does happen and can happen and will happen again.
Sure.
Obviously differs by market, but we'll be reviewing the March national stats in probably a couple of weeks here and have another video for everyone.
Yeah. And I think I believe you charted HPI, national HPI, or maybe local HPI beside interest rates, but it would be an interesting one. Maybe we can look at that at the next national market report to just get an understanding, because I think it's clear that there's an inverse correlation between interest rates and house prices, but people really have to understand the meaning of that, because we've been in a declining rate environment and a bull run for, basically 26 years, at least declining real rates, right? I don't even know if we'll see real positive rates. So, I don't think they can raise fast enough to get interest above inflation, especially given that I don't think we're being honest about what inflation is. I think the only bull case remaining is that inflation is what props up housing for the foreseeable future, and I just don't see it being a strong enough bull case, to be honest with you.
Yep, that's fair. When inflation's high, people want to hold hard assets too, right? Yeah. So kind of offsets that.
Yeah. Maybe we'll finish it off with a bit of a soft sell. If people want to do a demo on the platform that you're pulling all this data on, if they want to reach out to you to get it for the real estate office or for personal use as an end user, how should they get in touch with you?
Yeah, we have a contact form right on our website. So thehabstat.com. Also feel free to email us at contact@thehabstat.com.
Amazing. Okay.
All right. Thanks, Dan.